Monday, June 16th, 8:48 a.m. So, with that being said, this video is going to be a continuation of what I posted from last week, encapsulating the entirety of the weekly ranges. And with that being said, we are now beginning to enter into a new trading week. We are in a new trading week. It is now currently Tuesday. Monday's delivery has panned out and played exactly as it should. We're in bullish PA. So I've been holding a demo trade in longs from like all the way down here at 9:45. Uh, and just to test my concepts and things of that shit out, get better at executing at certain particular levels, and then holding into the next trading ranges. Every one of the very first things that I do want to go into, opening up Monday's tradable day. Um, we've expanded um, almost damn near 1,000 points off of the Asia Open. So taking it from where we had our previous close on a bearish candle, and then all the way up to the next volume node, about 680 points roughly. But what I like to do is take it from where the very last candle opened, or the low of that candle's wick, and drag it up to its highest point. So that was roughly about 717 points off of our previous close, going into our next opening candle for the 6 p.m. range. And taking it really from there and just seeing where price has gone all the way from that low all the way up to Monday's high. Within 19 hours of the market being open entirely one full day, we've nearly moved up over 1,253 points just from that previous open up to where it currently made its highest draw at 12:15 p.m. Now, with those who trade ICT concepts, I'm pretty sure you're very familiar with the importance of lunch hour, noon, in between the profit taking hours of about 10 to 12. That's usually where you see the high of the day form itself, and or low, depending on what bias you've pretty much depict the market to pan out. Just some food for thought into why that 12:15 level is highly important. It's usually where you find the high and or lows on the day, depending on what side of the range you are trading. So same thing that I did for last week's PA is the same thing I'm going to do now. Right now we are currently looking at micro NQ, and I will cycle through the other time frames for ES and YM, just so you can see how the PA looks for those deliveries, and then tying everything hand to hand to understand how you can utilize institutional order flow, and visualize how the other markets are moving as well, to get an idea on what your trading approach is. So market correlation, that is one of the heaviest skills or tools that I use a lot, is looking at my other index markets and correlating the market structure across all three of them, but really across the two, if you take away the selected pair. And I do that over and over again. So getting into it, well, I do it every day, but getting into it, Monday we were already bullish. If you haven't already noticed, we already shot up damn near 1,200 points from our previous open. At least that's where it panned out now in hindsight. But if you were looking at this move, so much range. But if you were looking at this move here from where we had our low and then coming all the way up to where we sat and consolidated, the market already moved up 963 points from that open, and into where it formed its highest high was pretty much within this consolidated range here. So we had the high being formed on the day at 4:45 p.m. My bad, a.m. which is pretty much London session. So when we had that high being formed, noticed how at 9:30 we came and we retested back inside of this consolidation. This here is again known as a holding pattern. The market goes through the stage of accumulation or reaccumulation before we get that next leg of distribution, which is why I took longs at 9:30, and sat through that choppy accumulation, reaccumulation of PA going up until we finally got somewhere up here at 12:15. But I already took roughly somewhere around 30 to 40 points out of the buy up with 5 micros, which means that I would be making anywhere between $300 to $400. Say like it was probably like 35 to 40 points because I had 2 entries. Either way, I still came out of the trade making 41 points. So it was roughly about $400 and some change. That's what I made on the buy on Monday. And I didn't take any other trades besides that one. So looking at how we opened on 9:30, try to move my camera a little bit out the way. But seeing how we moved at 9:30, look at this accumulation here. And then your job is to pretty much go and look at the other 2 indexes and see if you can find any type of similarities in the structure. So if we sat above midnight opening price here and the market sat in a stage of accumulation, meaning that there is no stronger participants at this point in time, though you do understand that from the bigger perspective, the bias is bullish, cool. But at this point of time, sellers don't have control. Buyers, we know they have control, but we're just waiting for them to give us that next leg that's going to send us to where it is that we want to go to, so that way we can get an entry with that PA. Now you're just going to go back and compare the two between ES and micro NQ. So I have my second chart showing my Streamlab OBS just so I can make sure that my camera is not in the way when I'm showing price action. So I'm only utilizing one screen right now, but I'm going to go ahead and cycle through ES. This is Monday. Clean this up a little bit for you guys. And we're looking for those same similarities. So what do we notice? We are also above midnight opening price, taking the opening of that bearish down close candle, dragging it out to the right, styling it real quick. I like dotted. And I'm going to title this midnight opening price. The coordinates for that price, 7583.25, and very similar in the same thing that we did on NQ, which is sat in a range. Market is accumulating. There is no strong participants of sellers in the market and or buyers. We are ranging, so that's why we wait for that delivery at 9:30, which gives us that opening expansion outside of the range. And this is what you're looking for between these correlated assets. So notice how we come down, we come and give a retest back below open. A lot of times you could probably identify bearish order blocks and things of that sort to get a feel of where you're expecting institutional buying to come into play. But that's not really what the purpose of this video is. It's really just to teach you market structure and blending and meshing the idea behind time and price, as ICT would tell you. This is really, how you utilize the concept. If you can understand time and price and understand how to read these charts and visualize the things that you should see, it would make your executions a whole lot better, make the possibility of making money a whole lot easier. There's so many positive things about trading this way and having a systematic / algorithmic approach to the marketplace, because that's literally what it is. If you haven't realized already, the market is pretty much ran by an engine, and 90% of the time the engine is literally doing the same exact thing every single day. there's only four things that you will ever see the market can do. We are going to consolidate, retrace, expand, and reversals. That is it. If you know how to mesh all four of those concepts and tie it together to understand your trading approach, you can make money every day. I promise you. So, this is how micro NQ's range look, and then that breakout at 9:30. This is how ES range looked, and then that breakout at 9:30. So, putting these two side by side, micro NQ, and we're gonna go to Monday. So there's no noticeable SMT divergence that I'm seeing. You had the low here at 6:30 and 8:45, 6:30 and then 8:45. So I don't see any type of similarities here with these lows. Looks like relative equal lows, and then this one here just looks like a higher low. So price is pretty much being stabilized. Has a bullish continuum. That's at least what I call it, and we are sending upwards. So market comes down here, retests into this range, expands, we shoot out of the consolidation, and we go up. Very similar in characteristics here. We come back down into this down close candle, retest that range. Market makes a bottom here. We don't come back down to that bottom of that range, and then price just pretty much expands. So similar in the sense, not too similar in lines of how the PA panned out for the leg, but noticeably there are things that you can see with SMT divergence. This leg of PA is more so stabilized. When I see SMT divergence, I usually look for sweeps within the SMT of lows or highs. I've never really paid too much attention to where we have stabilized price legs where it's just, two consecutive lows sitting at the same area. I like to see in this case, since we're bullish, I want to see one of the indexes form a low, higher low, and then I want the other one to form a lower low, to indicate that sweeps have been taken within the marketplace. In other words, what I'm saying is that draw on liquidity, wherever the market wanted to take itself to, the market magnetized itself down into that low, that particular area, took liquidity. Anyone that was willing to get into new place shorts down here in these levels, and of course stop losses as well, hunting. And once I see those types of sweeps being correlated between the two indexes, and then of course we're bullish as well, if that's in the back of your mind, that's what you're looking for, that's the bias, that is your market making approach to the marketplace, then that's going to help give you confluences to attack the market in that way as well. Now, going on to the very next chart, we have YM. So now we're going to look at the similarities in this leg of structure with YM, doing the same exact thing. You see here with YM, it kind of did the same exact similar approach to where we sat in a range, accumulating PA. So while I'm doing this, boom, boom, expand this out. Again, very same thing. I want to see where we're at when it comes to that midnight opening price. So midnight opening price. Coordinates for that 52055. So that's where we open. This is where the market formed its bottom at 545, which was within London. That is the low for Monday after midnight. These levels usually become important as well because they are the high and or low of the day. So when price does make these bottoms of these ranges within these particular areas, a lot of times you will not see the market come back to those highs or lows, which gives you the type of foundation that you need to see that strongly doesn't oppose what it is that you're looking for. If you're looking for longs, we don't want to see 52.010 get swept, though it can get swept in a form of stop hunting, and then the market can go up. But we don't want to see this low get taken once the initial sweep has happened. So it already swept and made this low here. So we want to see this low uphold, and we want to see PA continue to expand and go higher if that is the case for the day, which that was. So now we look for that 9:30 open, which it looks a very lot different than it did on ES and NQ. And these are some of the similarities that are not so similar with indexes. These are some of the things that you want to take note of. Notice how if I was to take two and two, of those charts and put them side by side together, you see here YM is on the left hand side, sorry, and this here is micro NQ. So moving this over a little bit, bringing that to the right. So notice here on micro NQ how we opened our 9:30 up here, very clean PA, at least. It was cleaner than YM, while YM literally sat in range. Look at the high of the 9:30 stick all the way up here, the low of it here. We swept a few times, dibbling, dabbling around in this area, and then it decided to finally expand and take out the high of that 9:30 stick. And since we continuing to sweep the higher end of the candle, which expands as price continues to push itself up, and that might go over a lot of people's heads. So by 9:45, the market made up its mind here to take this high again at 11 o'clock. So look at the PA on YM. It is not as clean as it was on micro NQ, and not as clean as it was on ES. Look at the ranges at 9:30, the delivery of price after 9:30. Look at the delivery of price after 9:30 with YM. So this here is just a pair that you wouldn't trade. You would be more so focused on ES and micro NQ. If you're trading mini or the micro version, it does not matter. But just take notice of what is happening with price after 9:30. What is happening with price after it's sitting within these trading ranges and things of that sort. Which index had the cleanest delivery? And that would be ES and NQ. And YM, complete chop, clusterfuck. We drew higher on all of them, making the higher high of the day for Monday at 12:15 p.m. on micro NQ. We ended up making the high on the candle range day at 1:15 p.m. here on YM. And then for ES, last but not least, we made it at 12 o'clock. So slightly off, by an hour and 15 minutes, then, hour and 15 minutes behind. And then which one was for, so about 1:15 we made the highs, and then the real high on NQ was made at 12 o'clock. So we got the highs being made on NQ at 12, and then YM and ES being an hour and 15 minutes ahead, then making its final resting high on the range. So this is pretty much what we did on Monday. That was Monday's delivery. I was bullish. I was looking for longs. I took longs. I made money. And if you were to get a feel on how the ranges on my trades play out after entry, I would not have entered in down here. I usually wait for breakouts with stronger confirmation because we have volume at 9:30. So if we were to take a long position and take it from the breakout, I usually utilize 50-point stops. 50-point stop here. Stop level. $50-point stop, and then the area where you would close at is within profit taking hours. So 12 o'clock, that candle's up close, or the last initial sweep would be where I would take my profits if I was continuing to hold the trade. So this candle here at 12, I would have at least waited for one more sweep, or I probably would have got out right here on this candle here at 11:30, taking that last and final sweep with that bullish exposure at 11:45, and just closed here on my exit. Don't need the very top upper proximity of a range to be profitable. Being able to even have the ability to trade within a 290-point range while risking 50 points is more than enough. And being able to exit with 226 points and 3 ticks is more than enough for a day. So that trade, all in all, was about a 1-to-4 risk to reward. Just notating ranges. But yeah. So a 1-to-4 risk to reward to about a 1.5 on the day for NQ, since this is the payout trade. And you would do the same thing to the other indexes. If you don't trade NQ but you trade YM, you would take this strategy and approach and apply it to YM. If you don't trade YM or NQ and you trade ES, you would take this same strategy and approach and you would apply it to any market that it is that you trade. So there is, no wrong market to trade. You just focus primarily on the market that continues to pay you, and practice within that market. But really, as you get better and better at the concepts, there's honestly not a market that you can't trade in. It's literally the same thing. So that's the video that I pretty much owe you guys for Monday. And Tuesday, it's already done panned out. So this is pretty much what I was looking for us to sell off and attack the lows that we pretty much made within Asia, which is already panning out. So this is the entry that I was looking at. I already took some partial closes out of my demo from the buy that I've executed all the way from down here on micros. So like I executed it down here after the sweep, and when we came back up, I got in for longs. I traded this day as well in my live account, but I never hold my trades too long. Hold the trades out of my demo. I take profits within my live, and I continue to pay myself. So yes, now that I've got Monday out of the way, we could pretty much go into Tuesday. So Tuesday is damn near, it's already done while I was making this video for you guys. So going over Tuesday's approach, and I'll do the others later. Coming back later into the day, I'll just make a continuation of this video, looking at ES and YM later on in the day. But the low that we made back here within Asia, it got swept at 9:05 p.m. That low now becomes the low on the trading day. The market sat and accumulated, re-ranged, and this was pretty much in London session. We expanded, same delivery that we got yesterday. Market sits in a stage of accumulation, breakout, retest of the range. We go higher, you buy with confirmation. Then we set another range here, these relative equal lows, just low, lower, low. We had the high on the day right here at 445. We swept that high, made the high of the day here at 720, and we've came and closed back into the range, and now the market is starting to make its draw lower. So once I seen that close and that trade back into the range, I looked at this as a form of mitigation. Potential buyers exiting out of their longs and re-entering into shorts here. So if you do understand ICT's mitigation blocks and things of that sort, then you would look at this as a bearish breaker in a sense. And the price came right into that bearish breaker, right in between this inefficiency here within this down close candle, which you would think to see a new placement of shorts in this area. So it comes right here at 8:30, makes the high within that inefficiency here at 3872.25, and then we get that downwards momentum in PA. So I was thinking about taking this short position here with a 50-point stop, of course. And I wanted to see price get down into the low of the day. So clean 1 to 2. I will leave this here just for the sake of the video's purposes, even though we already pretty much closed out one particular level here, which was the low within this range. So already done traded into a level of sell stops, SSL, sell side liquidity, an area that price is magnetized to at 3793.50, and that level has been traded into. So this is where you would set a partial close off of your trade position. If I'm usually trading like 3 to 4 micros, I would take like 2 off, maybe 1 micro off, let the other 3 ride and break even, which drastically increases your risk to reward ratio, making it a risk free trade, and now targeting at a 115 point draw, to be exact, 117 points. We get back underneath this low, that'd be an 88 point target, but that's not what I'm looking for. Definitely looking for this to go lower, but gotta wait till 9:30. So I hope you guys enjoyed this video. It's my first time having the cam on and shit, so I definitely want to do more things like this, going over these deliveries and just, I guess, helping people understand how to have these realistic approaches behind the marketplace, utilizing ICT's concepts and making money. So till next time, I'll see y'all later. Peace.